How do you identify if you're in a bull market or a bear market? And did you know you can actually be in both at the same time? That's what we're going to cover in today's video. The bulls and the bears. Like, subscribe, hit the bell notification. Let's dive straight in. We're on a Bitcoin weekly chart. First question I have for you is this part of the market, is it a bull trend or a bear trend? Right? Well, the macro, the answer is it's a bull trend. You go, what did you get? With the arrows pointing down, it makes no sense. Remember what I said. You can be in a bull trend and a bear trend at the same time, and today that's going to make perfect sense to you. What you want to really be aware of, that there's trends within the trends. So I'm going to zoom out to give you context on this. And what do I mean? So intermediate trend, it's a bear trend, but macro, which is the biggest trend, is actually a bull trend because markets tend to move in 5s and 3s. And it's really important to know where is the crowd psychology at in terms of the sequence of the 5s and the 3s. So if we zoom out, this will make perfect sense to you. So I'm just going to go bring in some past data, really going back to 2017. And I'm going to pull in some recent data. So, I might have tricked you there. That is not the most recent data. So now I was pointing at the fact of this part here. How can this be a part of a bull trend? Well, if the markets tend to move in 5s and 3s, if we can identify a clear 5-wave structure, this move up, the first wave up, this move down, wave 2. We've had this 1, 2, 3, 4, 5 of a wave 3. This part intermediate is a wave 4, which is intermediate. It's a bear trend. But macro is a wave 4 of a 5-wave sequence. And wave 4s are typical of profit taking. And that's what we want to identify today. Really understanding how the bulls and the bears unfold and how you can make money in both conditions. So even in a bear trend, you can make some money going long. And in a bull trend, reverse, right? You can short the market as well. But the ideal is in a macro bull trend, the money's on the upside. So that's the trend, but there will be some opportunities in between. So let's just break this down for us. Let's just go back into 2017. Thank you for watching my content. Now, I want to help you make more money from the markets. And one of the key secrets is to always trade in the direction of the trend. And it's the reason I've created the trend identifier. It's a very powerful tool because it tells you what to do based on the momentum. So when we see that the market is bullish and it says consider buying, look what happens. We get a nice buy signal and then we get a nice follow through. And this allows us to really leverage the markets. You can now trial it for £1. Got a whole training to take your trading and money making abilities to the next level. Now, it's obvious to see, we can probably even take this data back to even down here. Early January 2017, we had this amazing move to the upside. Let's just pull it in like so. All right, so we want to see trends within the trends. So the real point I want to get across is obviously this whole part is a bull trend, right? But you want to be aware, and we wouldn't want to short the market in these conditions overall, but you'll see that there's micro corrections, right? There's a micro corrections, and these are intermediate corrections as well. Micro corrections over here. But overall, the trend is up, right? So that's a bull trend. How long does it typically last? Well, it depends on where the structure of the market is overall and what you're referring to as a bull trend. Because sometimes the nuance is, someone could be talking about a bull market in a macro trend, 10-year viewpoint, and someone else is focused on the next 7 days. Is it bullish or is it bearish? And we want to be able to articulate the two because the decisions you make will really be determined by that. So down here, clearly a bear market, right? We got the top in 2017. It was the end of 2017, and then it was just an aggressive correction. Nice profit taking occurring, natural, happens in all markets, not just crypto, psychology, rules, and we want to be really, really aware of that. This is hopium, this is euphoria, this is people getting rich, especially if you bought down here, and then the masses are pouring into the market, and then it's just unsustainable, and then profit taking occurs. And that cycle just repeats itself. Really, really important to note. So, but look at this. We had some upward movement in this bear market, right? But we want to know that these upward movements are just corrections, and the trend is clearly down. So now let's just look at the next part, which we're going to refer to as the wave 3, right? We're just going to pull it up like so. Let's just get this right away over here. And let's just move it like so. I want to just squeeze it in and just get the full wave 3, right? Literally off the charts, right? Off the charts. Let's just squeeze it in. I want to talk about this because this is going to happen again. It's going to happen again. It's inevitable. You know, it doesn't matter what you think. It's just natural, normal. The technology is second to none in terms of Web 3. I heard someone talk about the term Web 5. I was like, what? Where did Web 5 come from? It's like, I thought we were on Web 3. That I won't talk about today. But let's just look at this now, right? So we've got this clear bull trend from December 2018. Let's just call it early 2019. This down here was COVID, right? This was COVID. But clearly this is a bull trend, right? Clearly bull trend. Like in hindsight, it's obvious. Massive buying behavior. But there'll be corrections in between. So macro, this is just bull trend. No two ways about it. But there were some big corrections in between. This was the biggest one. This was COVID down here. So we want to be aware of that. So even this was very bullish. There tend to be corrections within. Then we had some other movements up, small movements to the downside, movements to the downside, a few movements to the downside, and then a bigger correction. So what I want to get across is that there's degrees of waves. It's like a surfer surfing the waves, but there's massive waves, there's intermediate waves, and then there's microwaves. And depending on what your business plan is, your trading plan, your investment plan, you might just want to buy and hold for 5-10 years. So then you're just going to look at the macro. Just go, look, I'm just interested in the macro. But if you're trading day in, day out, or week by week, month by month, then we want to be really aware of these micro trends in between. So what do you notice? Or do you notice anything? And sometimes to the untrained eye, it's hard to see. But when I make sense of it for you, let me just draw it like this. We're going to look at this and go, look, this is move up, wave 1, looks like a wave 2 of a wave 3. We got this nice move up here, a wave 3 of a 3, which is very bullish, a wave 4 of a wave 3, and then a wave 5 of a wave 3. So 5s and 3s tend to unfold time and time again. So if I just change the color, and this is how I use the terminology, even for my own analysis. Here, the red is drawn in intermediate, as in like an intermediate wave. So I'm going to go one down and say it's a minor wave. I just like to have the lettering different and the colors different. Why? Because now I can clearly see that there's this nuance between this macro wave, but then there's these smaller minor waves or intermediate wave, and then minor waves over here, this correction. But when we get to a wave 5 of a wave 3, what typically occurs? Well, you can probably guess it, right? You know what happened. This was one of my first videos in April 2021 where we pegged this top. And a big part of it was because of this pattern sequence, this buying behavior, a wave 5 of a really bullish part of the market. So what typically occurs is a correction. So I want to show you something as well. So what we want to know is this. Most wave 4s, so we're looking at the red, right? We're looking at the red. So we've got a wave 3. And what's coming next is a wave 4. Most wave 4s end in the range of the former wave 4. What do I mean by that? Well, the former is the blue, right? It's the blue section over here. That's a guideline for buying and selling behavior. It's like the market remembers, the crowd remembers different resistance and support zones. And the previous wave 4 zone is very common. Right, so we can actually draw a box over here and say this is the former wave 4. Let's be on a high alert about that. But also, the selling behavior when we're looking at bulls and bears and macro trends, intermediate trends, and minor trends. Normally, a wave 4, the typical maximum is 61% retracement. Slow down. What are you talking about? Well, this movement to the upside, this whole big movement to the upside, what we're calling as in the red, the wave 3. Typically a maximum wave 4, the extreme of a wave 4, is a 62% retracement. 62% retracement to the downside. It's a profit-taking wave. It's natural, it's normal, it happens in all markets. But by being able to identify these macro and minor and intermediate waves, you can be 2 steps ahead as a leading indicator to go, I know what's likely to occur next. Not guaranteed, but likely to occur based on the psychology. So now let's just do that retracement. So I'm going to do a retracement. I'm going to use a retracement tool. I'm going to take the low. I'm going to just do it over here, just so I'm going to draw it from this point over here. So it'll be on the right of the chart. So I'm going to take the low, and I'm going to take the top, I'll take the extreme of the top, and the number that I want really is the 62%, right? That's what we want, right? Also, the minimum wave 4 is typically 38.2, and it's quite common that it's 38.2 to 50%, but the typical maximum is 62%. So we want to be aware of all three. And then let's just unfold this data, right? So let's just take it as if it was brand new data. Let's just take it like it was here, right? I'm just going to replay this over here. And let's just zoom in like this. And I'm going to unfold the bars one by one. So now, when you see a wave 5 over wave 3, what you want to know is if it takes out a swing low, that'll be a good confirmation, early confirmation that this trend, this bull trend, is likely to be over on an intermediate level. And we're probably going to get some type of correction to the downside, right? And that's what my first video was about. Some people thought I had a crystal ball or something. I was like, no, we're just recognizing psychology of buying and selling, right? So we're around this point over here. All right, we've taken out that previous low. So it's likely that this is now the top. This is now the top, and it's going to hold. But look how like it felt really steep, right? It was like really steep for a wave 4. But look at it, is that magic, right? This is really, really powerful that you can see that is in the range of the former wave 4. So it's like, hang on, if you knew that in advance, you could go, okay, it's hit the maximum, typical maximum wave 4 retracement, 62%. It's in the range of the former wave 4. You can look at momentum indicators and everything else, and it looks like an unusually sharp, but it looks like an A, B, C correction. Very, very sharp, very, very impulsive on the downside. But the main reason it was so impulsive on the downside is because the market got overheated. Like, it really got overheated over here. This was all hopium. People got too aggressive and money poured in like there was no tomorrow. So when that happens and it overextends, the correction tends to be quite steep. So now, even though this is on a macro part of a bull trend, because the wave 4 of this bull trend on an intermediate, wave 4 in itself is a bearish condition. So now we can let's just finish on two more things. We'll finish on the November top, because I hear people are talking about bull markets, bear markets, how long they last and everything else. But it can be quite misleading because two people can be having the same conversation, but in their mind, one person thinking about 10 years and the other person is thinking about 6 weeks or 3 months, but they haven't articulated that to each other. So they're arguing about, is it a bull market, bear market, up, down, left, right? And it's like, wait, let's just get on the same page first. What are we talking about? Are we talking about the next few months, next few years, the next few decades? Well, then they're different conversations when we're looking at it from this perspective. So now, if we just get rid of all these boxes, and I'm going to show you something else very, very special. Let me just get rid of this red line for a second. Is what we want to know is, okay, if this is in fact the end of a wave 4, this down here, we know it is because we're obviously backtracking the data. But at the time, what you want to do is just put a question mark, right? You often see me use a big fat question mark. Why? Because we don't want to be under the illusion that we know what's going to happen. We just know what's highly probable based on the buying psychology. So we've got, what we spoke about. It was the 60%, 62% retracement. It's in the range of the former wave 4. There'll be momentum. There'll be a few other things and factors that we can take into consideration. So then we want to know in advance, okay, if this is now a bull trend, part of the macro bull trend, but it's a wave 5 of a bull trend, it tends to be the last leg of a bull trend, right? That's important to know. Why? Because everyone, when this happens, right, you're going to see it again. You're going to see it again. It's just going to happen, right? It just is what it is. If you don't have context, if I hide this and you don't have context on the buying psychology of the market, well, the natural feeling is, wow, this is just going up like crazy. Well, if this is going to continue, then it's just going to go up like crazy, right? So therefore, I want to just keep buying and buying and buying and buying. But if you have no context on how the market is feeling, is it overheated? Is it underheated? Is it overbought, oversold, and so on and so forth? So you can do some really cool things. One of which is called an external retracement, right? It's basically, I'll take the extremes. It's better if we take the closing price, actually. Is more accurate when you're looking at the macro, like we're looking at a weekly chart and some years of data. Okay, I'm drawing this so the drawings come back on. So let me just do this here. What we want is a typical wave 5, something called a 1.272 external retracement is a typical minimum wave 5. But we can also do something else quite special, right? We can do a wave 1 to 3 projected from 4. Don't worry about this. I got training on this kind of stuff that shows you the details. Basically, what I'm going to do, what I'm going to show you is the relationship. When you see a market move 1, 2, 3, right? If we measure that, how far that moved up in total, in price movement, and project that from what looks like to be the end of a wave 4, there's 3 ratios that a typical wave 5 reaches, right? And I'm going to show you this. So it's not magic. Every advanced science or technology is indistinguishable from magic, is what Arthur C. Clarke said. This is why it looks like magic, because anything you don't know how it's done, it looks like magic, right? But when you see the method behind the madness, it doesn't look that magical, right? So these were in advance, right? And we did this in advance. Wow, this is how we pegged the November top, right? Because in advance, I didn't have too much of a bias on. I did have a bias because I was even looking at the news thinking, is this going to hold? Because I was thinking confession, right? I was thinking my analysis says we're near a wave 5 top, but the news is so hyped right now. Maybe it can overextend to 100,000 and everything else. But the technicals are the technicals, and that's what I really lean on, and it can be really, really powerful. So what we're saying ultimately is we can have something called a 5th wave failure, which means the wave 5 doesn't exceed the former wave 3. Unusual. So it's unusual. So we can even just get rid of this and just go, okay, this is unlikely. So let's just get rid of this and not confuse ourselves. But the high probability is that we're going to see the price hit this zone in advance. Now, we know it did, right? Because we're backtracking the data. But this was done in advance. So if you can be aware of this, then you know that we're in the final stages of a bull market, right? On an intermediate and a macro, right? Especially if this breaks down to a 5-wave structure. So now let's just unfold this data. So let's just zoom in over here. And let's just unfold it to see if we get any clues, right? So we got the market moving up. Sometimes it's easier to see. I like to see it on the bars, right? Because we see the ups and the downs. And it weren't incredibly clear. It was reasonably clear, but it weren't incredibly clear. But when I was looking at this at the time, do you see any particular pattern? Well, first of all, the market's moved up aggressively, so we can get rid of this question mark and say, okay, this wave 4 looks like it's confirmed. And what I was asking myself was the question on, is there any 5-wave structure over here? This bit was a bit unusual, but if we look at it now, we've got the benefit of hindsight, is it looks like a move up, a wave 1, a wave 2, a nice wave 3, a wave 4, and a potential wave 5 of a wave 5. Now, this is just next level, right? Next level, what we're talking about here. We're going to go into a minor wave count. We'll make it blue because we're now getting into the nuances. But what we potentially got on our hands, we know how it unfolded, but this is how we pegged the November top. There was no secret behind it. It looks like magic in hindsight, but there's logical method behind the madness. This is how we make money from the markets, because what we've got here is, let me just draw it like so. This is a bullish movement, a wave 1 of a wave 5. This is a bullish movement, a wave 3 of a wave 5. And then this is clearly a bullish movement as well. It looks like it to be a wave 5 of a wave 5 and a final part of a 2017 bull run. You got 2017 bull run. Yeah, we're talking about 2017 up, 2018 down, 2019, 2020 up, and then we had the April 21 bump, bear market, and then this final stage. But if you can get where the market is as a crowd psychology overall, you can be 2 steps ahead of the market. So now what we can do, I'm going to do this. I wasn't planning on doing this, but I'll do this. I'll show you, because I really wanted to get across bulls and bears. And I hear people talking about bull markets, bear markets, but people don't have the context. They don't have the nuances, and it's too vague. It's too vague, and you can't make money with vagueness. We need to have clear expectations, and we need to make business decisions on this. So when we're looking at this, especially with closing data, we can see that we've now gone above this high, and we are approaching this high probability, and hear my words, high probability wave 5 of wave 5 price zone, right? Price zone. I'm going to bring something else in as well. I'm just going to show you how I do this. Let me bring in an indicator. I'm going to bring in, let's just bring in, we'll bring in both of these, but I'm going to delete one. I'm going to bring in, we want to see which of these, in fact, we'll keep both of them. We'll keep both of them. These are two indicators. That's stochastic RSI, right? They help determine the momentum. And when it coincides with pattern and price, then it gives me a big clue that we're likely to be near a top. So actually, I'm going to just use the top one, right? Because it seems to be just a bit cleaner. I'm going to make it a bit bigger here. What I'm looking at now is something called a confluence of events. What does that mean? Well, there's a few factors that are telling you the same piece of information that makes it more highly probable, right? Makes it more highly probable, right? So what do we mean by this? So let's just clarify, because we're talking about bull and bear markets. We got a 5-wave pattern. It was clear on the bars, but it looks like a 1, 2, 3, 4 potential wave 5 or wave 5. We got a Fibonacci price zone, and we've got the momentum that's bullish. But when the blue and the red line go into this zone over here, and we get the blue going below the red, the last time that happened, we had a minor correction. Here it was a bit choppy, but we had this big correction. It was okay in determining these points over here. But when all the factors coincide, that can be a massive clue for us that we're probably going to get some type of correction. And I'm going to tell you what typically occurs. So this was no surprise when you're looking at it, obviously in hindsight now, but we did these videos back in November, October. You can check them out. Go back and we said this. And this is why, though. So what I'm going to do now is some detailed analysis on this structure over here, right? Because this is what we're going to do time and time again, right? You can do it short term, long term. You can trade the markets. You can short the markets and everything else. We're going to focus on this part. And what I'm going to do is I'm going to measure the beginning of wave 1 to wave 3, basically what we did before, and then take the low of wave 4. And what we want to be aware of is the typical maximum is 100%. So this one here, 100%, right? So that coincides with this zone over here. Now, it broadens the zone slightly, but it just tells us, we can even narrow it towards this side here, it just tells us, be on high alert that we are approaching a very crucial Fibonacci price zone, a buying euphoria price zone. In other words, the market tends to top out at this price zone based on previous buying behavior. That's what we're looking at in this final stages of a bull market, the biggest bull market that we've had to date in terms of price movement, in terms of amount of volume, amount of market capitalization that's come into this space that we're looking at over here. So now let's just unfold the data and look at the momentum, right? The clue is when the blue line goes below the red, right? Let's just keep the data unfolding. And at this point, the blue would have technically gone below the red. And you can see this over here. There's these numbers over here. I've just made it so you can see it just above my head over here. So when I hover, you can see that the blue is still slightly above the red. Let's just unfold a few more days. And let's just make it a clear movement above and below. Let's just have a look. Okay, it's not there yet. And again, with a price movement, we want to see if the price goes below a swing low, even a minor swing low. This is called a swing low down here. This here. This will be the early confirmation, the early signal that tells us that this top is confirmed. So we got a pattern sequence. We could even go into a bit more detail on this because this typically breaks down to a 5-wave structure itself. So you could even see in a wave 5 of a wave 5 of a wave 5 of an end of a macro trend, right? So that's why technicals can really give valuable insights into this as well. So now we're on high alert. So if you're shorting the market, you go short below this swing low because we're at the end of a big bull trend, a 5-wave sequence, right? So if I just kind of bring this back up as well, we see it like this. Let's just now unfold the data a bit more. Let's just get that bearish reversal on the indicator. Boom, there. So now it's crystal clear, right? We've got this bearish reversal on the momentum. We got price ratios We got a 5-wave structure of a macro 5th wave trend. Now, all of a sudden, this is how I'm going to show you how to identify bull and bear markets. What we're looking at over here, just so we're clear and on the same page, is, and at the time you would have heard me say the words, because one of the reasons I'm aware of the news. I'm aware of what's happening in the world, so don't get me wrong. So I'm very aware, but I don't watch the news. And one of the reasons is people confuse people, right? Because it's like, okay, the technicals are telling us this is getting overheated right now. We should be looking to sell everything, potentially short the market. This is a wave 5, a wave 5. If we take out this swing low, then the market is going to potentially continue to the downside. So what we want to ask ourselves is, what typically happens after a 5-wave correction? Well, we know already, because this was like a 5-wave move to the upside, overheated. But what happened? Well, we got this big 3-wave correction, right? If we look at this over here on the blue, we had this move up as a 5-wave move to the upside. What did we get? Well, we got a 3-wave correction, right? Including COVID, right? So what on a macro trend do you think will happen after a big in the red? 1, 2, 3, 4, 5. What typically occurs? Well, the same thing that happened here and the same thing that happened here, but just on a macro degree. This is why we can have bull markets and bear markets at the same time, depending if you're looking at the macro, the intermediate, or the minor trend, right? That's really important to be able to distinguish what are we talking about right now. Because if someone says, are we in a bull market or a bear market? I go, what degree of trend? And they go, what are you talking about? Because then you have to be educated on what we're talking about, right? So typically what occurs is a B, C style correction. How it's going to occur, we don't know exactly. But what do we know? So now let's just get rid of all these lines, right, on the right-hand side. In fact, we won't get rid of them yet because we haven't confirmed it. But what I want to show you is if I just draw it like this, just so we are on the same page, so you can be ahead of the curve, because it's going to repeat itself again in all markets, not just Bitcoin, not just crypto. We're talking about gold. We're talking about stocks and shares. We're talking about the Forex market. This speculation, markets get overheated, and then they get undervalued, overbought, oversold on a macro, intermediate, and a minor. So now, if we just do a retracement from the 2017 low, we will take the extremes. We'll take the extremes, right? And the typical 3 ratios that we want to be aware of for all corrections. The most common, most typical. The typical minimum is 50%, right? That's most common. And if it doesn't hit 50%, it's more often than not complete, unless it's a wave 4. Wave 4 is slightly different. 62% is quite common, and the typical maximum is 78.6%. This is all markets, all time frames. So now, in advance, what we're saying is this looks like potentially a 1, 2, 3, 4, 5 of a wave 5 macro end of a trend. And we're anticipating some type of correction in this range over here, right? Well, we knew this in advance, right? So it was no surprise. So there's another thing I want to show you. It's a bit advanced, but you're with me so far, so you're getting this. There's something called Fibonacci time ratios. You go, what? Because someone was asking me the other day, how long do bull and bear markets last? Well, I go, of what degree of trend? Because again, we need to have the same conversation. So there's a typical time ratio that a typical correction takes. And this move to the upside is pretty clear now in hindsight. 1, 2, 3, 4, 5. So if we measure how long this took, the typical minimum time it takes for a correction to complete is actually 38.2%. Most common is 50% to 62%. And then extreme complex corrections take 100%. Gail, what are you talking about? Well, we can measure how long did this take from 2017 all the way up until November 2021. How long was that? Well, we've got a tool down here called trend-based fib time. So we're just going to take the beginning over here. We'll take it from this point over here because this is the clearer low on a macro when we're looking at it like this. We'll take this top over here. It's not been confirmed yet, but we know what happened already, so we can take that with confidence. Double click, and the ratios that we want, if we've got them already, 38.2% is the typical minimum. Typical maximum is 62%, and then the 100% is where it overextends. When it's hitting the 100% time, it tells us that is probably overdue, right? Overdue. So again, it doesn't mean it can't be shorter and everything else, but what it tells us in advance is, if I just keep dragging it across, let's just see where that 38.2% takes us to August 2023. You go, what? That's another year. Now, look, let me just make sure, because sometimes I just want to make sure I've got that there and this over here. But it gives us a feel that we should, towards the end of this year and then a few months into next year, maybe see that 38.2% might be that date. But the key is, so if I just now unfold the data, I'm just going to unfold this data. And to be honest, I think we might be at the end of a correction already. That's why I was just double checking that date, right? Because we want a confluence of events. We want pattern, price, momentum, and then take into consideration Fibonacci time. And there's some other time factors. Retracement is just one of the key tools. So now let's just unfold this data, right? So clearly we've had this big move down. Again, we're going to finish on this because now when this low got exceeded, this low down here got exceeded, this is a strong confirmation and an indication that this is going to be a top and that this top is going to hold possibly for many months. But it turned out to be over a year, right? Over a year in terms of it's been a year since this top. We've also had a big movement to the downside, which is bigger than any other former move in this sequence. That's what you call an overbalance of price. So now if we take out this low down here and this low down here, then that's going to confirm the bear market. But let's do it in the context of this, right? So now let's just get rid of all these lines up here. And we'll finish on this. But this is important. This is really important because I think a lot of people just confuse the matter, right? We can keep it much simpler. So let's just unfold the data. Boom, we hit the 50% retracement. But it's nowhere near the time, right? It's nowhere near. It's would this be a complete correction? I go unlikely. It's probably just the first leg of the correction. Why? Because it's just not been long enough, right? So what we also know, let me tell you this, is so some other Fibonacci time factors we can take into consideration. When you got a bigger degree correction, and what we're talking about here is this is a degree of wave count. This is technically it's the intermediate wave count now. The macro is this whole move, right? This whole move. So what I would do, get a bit detailed here, but I think this will be valuable for you to know. We're talking about bull and bear trends, right? So we're gonna do a job. We'll do it right. Let's complete the full information so you have this. So this is the macro wave one now. You go, what? A wave one of a 505 of a 1. This whole move has completed a wave 1. So that means the next macro trend is a wave 2. Right? A wave 2, the next macro move to the downside should be bigger than any intermediate correction. Go, Jagger, please translate. What are you talking about? All right. Well, this is the biggest correction in terms of time, how long it took. This was a long, long correction. And if we measure it, it was from December 2017 to December 2018. So it's 12 months. 12 months. So you go, well, how can that give us valuable information? Well, if we measure that, right, using the Fibonacci time tool, we measure it, and I project it from this top, and we want the ratio 100%. We got a big clue. What's the clue? What's the clue? The clue is the correction, the macro correction, should go beyond this red line. In other words, it should take more than 12 months. Why? Because this correction takes more than 12 months, and this is an intermediate correction. Here, this is a macro wave 2 correction. So all of a sudden, we go, oh, well, any move to the downside, especially if it's very impulsive, it's probably just going to be the first leg. So we're probably going to get some type of second leg and then a third leg down. And we only really want to take the end of a correction seriously if it's beyond this 100%. Make sense? Right? That is powerful information. That is really, really powerful information. So now all of a sudden we can go, okay, let's not believe the hype, because the news, this is what I mean by the fear, uncertainty, and doubt, but also the hopium, where people go, right, the correction looks like it's finished. And I go, what do you mean? How can it be finished? It's just starting. This is just starting. So if we unfold the data, right, and we get some movement to the upside, right? So now there's talks of it being, in fact, let me just take it back. That was a bit too fast. Let me just take it back here. Right. So then here, including myself, right? Including myself, I go, potentially this could be some type of A, B, C correction. This could be a wave 1, a wave 2, and then a follow through to a wave 3. But what's the clues? Well, the clues is, well, if this is a macro end of a macro trend up here, then the whole correction should take more than a year, or at least a year, right? Because of what we saw previously. So then when we're looking at it with that context, look at what we could do, right? I'm going a bit detailed here, but I think you'll find it valuable. So let's just do it, right? I'm gonna take this part of the market. So now we it's like we can see things other people can't see when you know this, because you just got knowledge, right, that other people just don't have. So now we can look at this and go, okay, this looks like relatively impulsive to the downside. It hasn't hit that time retracement or alternate time retracement or a projection. So this is more likely to be an ABC kind of correction. We can bring up the momentum, which I've got down here. Let me just shrink it a little bit. Where's the thing? There you go. There we go. Right? So what does this look like to you? Well, to me, I'll just look at it like this, and I would look at it like a normal ABC correction. So again, we're talking about bull and bear trends. So we've got a bullish minor movement to the upside, but the macro is bearish, but also the intermediate is about to be bearish as well. So then there's nice shorting opportunities. So if we just measure this, typical minimum correction is 50%. So let's just emphasize that for a second. We can do an ABC price projection. Again, this will make sense in just a second. We're going to measure this move to the upside. So this is what we did, by the way. This is, again, we're looking at certain factors over here. We go, right, this is highly probable that this is some type of A, B, C correction, right? And it's the same wave count on the intermediate level, which is basically the blue. And this is what I mean. You can have a bull market and a bear market at the same time. And let's just let's just denote it as a minor trend, which is the same as the blue. Right, so what does this tell us? Well, on the next bearish reversal on the weekly chart, we want to be on high alert that again, let's just wait for the blue line to cross the red, which is pretty much there. Now, if the price goes into the closing range of wave A, I'm getting very detailed, this is technical, I know. Closing range basically is a bearish signal. Basically, the wave A's closing price only went here. If this was a bullish trend, the price would not normally close into this range. And if it does, that signals to us we're probably going to get a continuation to the downside. So if I just draw it like so, this is the closing price of top of wave A. Sometimes not easy to see when you got the bars. It's basically this little dash to the right-hand side here. Over here, if it closes into this range, it's likely that this top is going to hold. And it's going to end up being some type of wave C. But what are we going to get? Well, let's just get that confirmation. So let's just do one more bar. Okay, we've got this bearish reversal now over here. We've got a pattern of an ABC, and we've got Fibonacci price zones. We could also do some time retracements. Let's just do some time retracements. This is how you do it, right? This is how you do it, right? This is just the name of the game. So most typical corrections end at a maximum of 62% and absolute max at 100%. And we can see we're in that range. So we've got that. Let me just grab this box. Let me just make it a bit wider. So we've got this range. Wave, there's a few other things we can do. We don't need to do them in too much detail right now. I'll do one more. One more is a high to high to high ratio. Basically, we go, okay, there's a rhythm to most markets. There's high to high. How long did it take? And then we can project that forward for the next high. And you'll often find it correlates. So we go high to high, and if I just emphasize this, yeah, here we go, bang. Look at that. It's 1 week before, literally 1 week before the actual top, right? The high to high to high ratio. So that narrows it down for us. I got this in all of my advanced training, by the way, if you wanted to learn some of this stuff. So now what we're going to do is we're just going to finish off. Where is the end of a typical correction for all markets when we're seeing this information? So now let's just zoom back out because we're talking about bull and bear markets. We haven't, gone on any tangents. We're just doing a bit of detail today, right? So if I now just get rid of this, let's just get rid of these. They've served its purpose. We'll keep the green box, right? And we'll just narrow it down to that day there. All right, so if it is to follow through as another leg, well, what do we know? Well, we know that it's likely going to be, I think, did I delete that? Was this November? Yeah, it's there. It's likely to go beyond this date over here. We know that it has now, right? We know that it has. But at the time, people are like, hey, man, this correction is going to last that long. Even I was feeling that when I was watching it. This is why I don't watch the news. I'm aware of the news, just don't watch it. Because what people are saying, they don't have this context. If you don't have this context, then you're just a fool speaking about, I don't know, just things that are happening and not really taking into consideration the crowd psychology on the real stuff, on what's really happening. So what we can do now is we can measure this and go, we're likely to get another leg to the downside, something along these lines, right? That's relatively common in all markets. Now, the hard part is to going, really? Do you think Bitcoin's going to go that low? And I go, well, if we could take that away and we could just go, well, this is the typical what happens. That's the zone. So if we could put our emotions aside and then we said, how long did this move to the downside take? Well, we're probably going to see it take at least this much time as well. And typical maximum is 1.618 of that. So we go, okay, now we've got this high probability zone down here. We could do a few other things as well. But when we're looking at it like this, some people think you're crazy. Some people thought I was crazy. I even thought I was crazy because I was like, the technicals are showing me this, but the news is saying different things over here. And in my mind, I was thinking, do you really think Bitcoin's going to, that's a lot. That's like, after all this, it's going to do this. And I was like, oh, I don't know if I want to say that publicly because sound like a madman. Sound like a bearish, just not being bearish. And I go, look, the technicals are the technicals. I've been trading for 15 years when I used to trade the Forex markets for 10 years. And what I learned was to ignore the FUD, fear, uncertainty, and doubt, ignore the news, be aware of the news, but ignore the news and just go with the technicals. The technicals have all the fundamentals baked in, right? All the fundamentals baked in. So I was like, all right, here's what it is. That's what we're expecting is an ABC correction. It should take at least a year because of how long this correction took. This is a bigger degree correction. Everything's hanging together. This is the typical maximum, 78.6%. We know Bitcoin's got a history of correcting 85%. So we go, all right, it is what it is. Let's just go with it, right? So now we've got this zone. We can overextend it over here as well. So when we're looking at it like this, from this context, all of a sudden now you got a different perspective on the markets. You got a perspective on the markets that no one else can see. And people go, how are you determining this? How did you know, Jagir? I go, I didn't know. It's just highly probable based on the buying and selling psychology. So now let's just unfold the data a bit faster. And you go, what? You go, hang on a second. You go, hang on. Wait a minute. What? Did that just happen? And you go, wait a minute. That was uncanny. That was like, what? And guess what? Look at that. Like, Jesus, that's just insane. Insane. Like, come on. When people go, technicals don't work or Elliott waves and Fibonacci doesn't work. And I go, this was in advance, guys. This is what we were talking about. We were talking about this back then. And over here, we were talking about this as well. I said, look, if we're just looking at it in a non-biased, objective manner, 78.6% is 78.6%. And look what happened. This is where we are recently now. So I did a video the other day now saying, are we at the end? Have we hit the bottom? Right? Well, now you kind of go, wait a minute, Jagir, this stuff is serious. This is, wait a minute. I need to know this stuff. This is something else. So now we've got this A, B and potential wave C. This is what, and let me just change it to red. So now you can understand the degrees of counts. And you go, okay, wait a minute. Wait, I need to wait, what? Even as I'm doing it, I'm like, it's probably the clearest I've articulated my thinking on how we do things. And you go, that was insane. That's why I say crypto is one of the best markets, because the psychology is so raw and it's so real, and it's therefore easier to interpret the data. So what we're looking at now, what I'm looking at now, when I'm looking at this from the same concept of what we've been talking about, is, so if we now just get rid of this, we're literally 1 year, right? Like literally 1 year going on just beyond a year now. And what do we say? It should take a minimum of a year because of that previous 2018 correction. It took a year, but this is a bigger degree correction, so it should take longer. Is it over yet? Well, we don't know. We don't know because there's complex corrections, there's different things. But what do we know? So let's just look at this now. So let's just get rid of this. This has served its purpose. We'll keep the 78.6% correction. And yeah, we don't need this no more either, right? We'll leave it there for a second, right? What else can help us information-wise, right? Well, I'm going to show you this, right? Because this is the information that we're using. A wave C, typically, whether it's on the upside or the downside. So here, this is a wave C on the upside before a wave C of a wave B, and here is a wave C of a wave 2, is a higher degree intermediate wave C. And the macro now is this wave 2 over here. Got a question mark because it hasn't been confirmed, right? But it looks like it's in this zone over here, which marries up with everything. But what are we looking at over here? What is this? Well, I'm going to do 2 more degrees of counts, which are potentially relatively clear, right? And so we're looking at this. So we got a move down, some type of wave 1, looks like some type of wave 2, very aggressive. We could call it a wave 3, 4, 5. There's a few different counts we can do. Mainly, this is very impulsive down. So even as I'm looking at it now, I'm just looking at it now. 3, this is how I was articulating it. 4, and then this looks like a really weird wave 1, wave 2, wave 3, wave 4, wave 5. So we're looking at a potential, some type of wave, like we saw at the top, right? Some type of wave 5 of a wave C of a wave 2, potentially, right? And I'm going to tell you what we need to see happen for this low to be confirmed. But then I'm also looking at this part of the market, one lower degree of wave count. Again, I'm just going to draw it here. This initial move down looks like a wave 1. This running is called a running ABC or ABC running. 2, 3, some type of 4. And again, I'm just going to unfold the data in a second. And a potential wave 5 down here. Right, the nuance is a bit clearer on the daily chart. I'm just going to change the color because now we've got 3 degrees of wave count. I'm going to change it to a micro so you can see it denoted differently. And now it's telling us information. There we go. We got price, we got pattern, we got momentum. So if I just bring up the weekly momentum, we got momentum and we got time, right? We got some of these time ratios as well. We're going, oh, actually, looked like Bitcoin might be bottoming out. But what do we need as a confirmation? So ideally, we want to see a swing high get exceeded. Now, remember what we said. Just take it back a second. Just want to take it back a second. Remember what we said all the way back up here. Let me just get rid of all this data. We said if this is the top, what would be an early indication that the top is complete? Well, a swing low, or even the closing swing low, which would have been up here, if that price gets exceeded on the downside, is likely this top will hold, and then the correction will go to the downside. Now, the reverse is true. How do we identify bull and bear trends? Well, what I'm about to show you is the same thing. So when we look at this, we go, okay, where's the obvious swing high? Well, the obvious one is here. There is a minor one over here as well. So now let's just bring all the drawings back. Let's just unfold the data to today, where we are literally right now with Bitcoin. And what information do we need to see? So if I just now get rid of this and take it live. is, and we don't want to jump the gun necessarily, but is it possible that this wave 5 of wave C of a 2 in this zone, we could probably call it here. Here will be the accurate point. So if we're getting very accurate from a pattern perspective, could this be the low? Now we don't know, right? We don't know. It might just end up being, a bit of a, ABC correction and then a follow through to the downside. But we're in this price zone. We're past the 100% price projection of the 2018 correction. But look at the momentum, right? Now, okay, look, the momentum went bullish here. That doesn't mean it was going to continue. It just meant some sideways to up movement. It went bullish over here, and we had this some type of wave 4 kind of movement to the upside. But when it coincides with pattern position of a macro degree, we got a minor, or micro, a minor, intermediate, and a macro. We've got 4 degrees of counts. And sometimes one will say one thing, the other will say other things. So we see have a bull and a bear based on a macro and a micro at the same time. But ideally is when they point in the same direction. When the momentum points in the same direction. The price is saying, look, we probably hit the low or at or close to the low. Now we should only be considering long trade setups. So where do we stand with Bitcoin right now? We're saying it with Bitcoin. This is the same for every market. Every market, we will have the same conversation with pretty much all the cryptos that we're looking at. When this blue goes over the red, which will probably be next week, and if we get a follow through, and if this high gets exceeded, this could be the potential low. It could be, right? But only time will tell. We want to see the follow through. But going how it's been behaving and pattern price time momentum, all of a sudden it looks very highly probable. But we want to see this high get exceeded. And again, what you're going to see if this high gets exceeded normally is some type of move to the upside, some type of correction, and then a continuation, right? How do we know this? Well, if we just go back a little bit and take this part of the market over here, well, that's pretty much kind of what we had, right? We had this relatively aggressive move, some type of pullback, further move, some type of pullback, and then it was a continuation to the downside. Then we had this ABC that we saw. We spoke about this ABC, right? We measured that. So there was opportunities as corrections within the move to the downside and then a further follow through. So now, all of a sudden, is Bitcoin at its end? We don't know. But the purpose of today was really bull and bear trends, how to identify them. We've spoken about it in detail. Like today was a masterclass. It will take your crowd psychology understanding to a level that 99% of the world just doesn't understand. 99.9%, because I hear people talking on the news all the time. I don't watch the news. You see these little clips here and there, and I listen to as much as I need to, and then I do this, right? Because I want to rely on what we're looking at here, momentum, which is helping us see just the momentum, the indication of the rate of change. We're looking at price behavior. We're looking at pattern position. We're looking at price ratios. We're looking at time cycles. And when they all coincide, well, the probability is stacked in our favor to say, okay, it's likely we're hitting a bottom, which means, so let's just finish on this. This will be a good point to finish on. What does it mean to hit a bottom? Well, let's just summarize this. Let's just really put this into context now, right? We go, all right, Jagir, tell me what 100% clarity. Give me 100% clarity on your thinking. Okay. Well, just the way we saw with the 2017 bull market, 1, 2, 3, 4, 5, it looked crazy that it hit nearly $1 trillion market cap. Crazy at the time. I remember it, right? Because this is when I really got involved in crypto down here. End of 2017, and then this bear market in 2018. And it seemed you just couldn't imagine that this was going to happen the way this was occurring. But it did. Right, that's the nature of the game. And then there was this crazy bull run, right? Nice, typical. It was overextended. This is normally where it would end, but it went all the way up to here. And then we had a typical wave 5. But on a macro now, that's just one move up of a wave 1. When we're looking at crowd psychology, applied crowd psychology, then it looks like an ABC of a wave 2. So what typically follows? Well, you probably guessed it, right? Well, there's another wave 3 like this one. But of a bigger degree. the way on a price movement range, this movement here, the wave 3 over here was this movement here. So clearly this is bigger than this. So what does that mean for the market? Well, the money that's going to pour in is normally on a more macro degree. That's typically what's going to occur. So if we said, well, what does that look like? Well, if I just get rid of these, let's just get rid of these lines. Let's just keep the 38.2 and we'll get rid of the other two, right? Just so we're really, really clear. Let's just say we're relatively confident. If I can get this box. We're relatively confident that we're at or near the low, right, of wave 2. And if it ends up being the low, what are we talking about? Well, what we're talking about is the next price movement. It's not overnight, because it weren't overnight with this. Like when this low got confirmed, where this move up, and then we had another big correction, and the news was here. It was COVID. It was the pandemic. It was the world is over. It was horrible news, and it was worse than down here. But then the market took off. That's why when we're seeing the news right now, when it's so negative, from recession, from FTX, from Solana, from all these other things, do people trust crypto? I go, that's typical of a wave 2. That's like a feeling of COVID over here. And what happened? Well, the next part of the market took off. So how do we identify the end of a bear market? Well, this feeling of maximum fear, recession, the world is over, is normal and natural in all markets, not just crypto, right? So what typically happens next? Well, let's finish on this. Well, let's just do it. Let's just project it from here. Let's just take the low of 2017, the high of November 2021, projected from where we are right now. Typical, most common, is actually 1.618. Overextended is 2.618. So you go, what does that mean for Bitcoin price? Right? Let's just forget on-chain data. Let's forget news. Let's forget what institutions are coming on board. Let's just look at crowd psychology. The world is involved. Banks are involved. You are involved. Retail is involved. Everyone is involved. Countries are involved. Michael Saylor is involved. Everyone's involved in this, right? If you're even just watching it, you're involved. If you're talking about it, your Uber driver is involved. The market will typically hit 120,000 per Bitcoin. And then if it overextends, which is probably likely, it's hitting, let's just have a look, around $180,000 Bitcoin. Now, we're not obviously talking about overnight, right? We're not talking about overnight. Nearly a $200,000 Bitcoin range, right? How long would that typically take? Well, we can just look at how long did this whole sequence take, right? This now what we're calling a wave 1. Well, this took, 4 years, 5 years, 4 years? So if we just project that forward, let's just get rid of these now. Get rid of these. And we just project that forward. Again, we're looking at bull and bear markets, but we're now talking sense, right? If you've watched the whole video, we're talking about macro thesis here. For the next 5 years, Bitcoin halving comes into this, but we're not reliant upon Bitcoin halving because that's another, confusion. It's like, wait, bull markets normally happen a year after Bitcoin halving, but we've already had that, and the next one's in, was it 2024? So does that mean the next bull market is in 2025? Well, this is my school of thought. This is, I don't think I've told anyone this in detail, just because sometimes it's hard to tell you what I really think without going over what we've just gone over. If we just say, how long did this take? And project it forward from pretty much today, right? We don't know if this is the low. And the typical is 100%. Minimum is 68.2. So what we're talking about, we can draw a big juicy box over here. We're talking about time retracement of October 2025 to June 27, right? June 2027. So we're talking about overnight, right? But what I would expect to happen is some type, and I will finish on this. Let me just draw it like this, just so we got absolute clarity, is we're looking at some type of wave 3 up here, right? And if we'll get some type of, 5-wave move and there'll be so this is what we're going to see on an intermediate level. In fact, I just want to change this. Let me just change this settings so we can make sure as I'm drawing it, it's on the right color, right degree of wave count. Right. So what we're going to look at is an initial move up, which will break down to some type of 5-wave sequence. Right. And it won't happen overnight. There'll be some challenges to overcome, but breaking these highs, something like this. And then we'll go through another intermediate bear market. Right. This is a macro bull market at this point, but intermediate wave 2. Right. Between 50 and 78.6% correction. Something like this. Right. So it's the intermediate bear market in a macro bull market is what we're talking about right now. And then an intermediate bull market in a macro bull market where wave 3 or wave 3 can be so aggressive. How do we know that? Because we saw it. We saw it all the way down here, right? And then intermediate bear market, which is called a wave 4, profit taking, in a macro bull market. And then into this range, right? Then we can get a bit more detailed on, is it going to end over here? Is it going to overextend to over here? We don't know. So we'll just draw it in the middle for now. But what to note, there's a few things. These are guidelines in buying and selling behavior, applied sociology and psychology in all markets. Is when wave 2 is sideways. See this? Sideways. Wave 4 tends to be steep. It tends to be sharp on the way down, and vice versa. So depending on if this happens, depending on what the behavior is in this wave 2 over here, if it's sharp or if it's sideways and long and drawn out, complex, because it's a complex correction, this was relatively simple in the grand scheme of things, then that gives us a clue. So, but right now on a macro, because this is what I think is going to happen. I think we're going to have the wave 3, most of the wave 3 before the next Bitcoin halving, possibly even the wave 4. And I think the Bitcoin halving will be in this phase over here. Where are we? Yeah, 2025. So it'll be around here. So I reckon the wave 4 will probably end around here. And then we'll probably get that Bitcoin halving and then the bull market. And then it will coincide with an overextension. And that will probably be, but I think we're going to see this in the coming months, the next 6 to 12 months. Then we're going to see this. And then we're going to see this. And then this. And then this. Wow, I wasn't expected to do it that detailed today. There was someone talking about length of time with bull and bear markets. And I thought, actually, I didn't want to go into detail yesterday. I thought, actually, let me break it down how I see the market based on my 15 years of experience, where we're using the 4 secrets, which is basically momentum, pattern. We really leaned on pattern today, but multiple degrees where we know we can be in a bull market and a bear market at the same time. So I just want to, this is a bull market if it happens like this on a macro, but then we have these intermediate bear market conditions for a period of time in the bull market. So even if I just change the color of this to green, so you can tell the green is the bull market and the reds are bear markets within the bull market. So it's intermediate, macro, micro, and people don't talk in this context. And it might just be just because they're not trained to talk in this context. But now you know the secrets, the real secret to really identify how to identify a bull market and a bear market, and to know that you can have both at the same time, and that you can make business decisions on should you hold, should you sell, should you stand aside, should you trade, should you use leverage, should you have protective stop losses, and all the rest of it. And there you go. Wow, that was, I don't know how long that was, but it was probably more detailed than I was anticipating. So what do you think? Right? Do you get it? Does it make sense? Is it still confusing? Is that helped? And let me know in the comments below, because if you get what I told you today, you're going to be able to see things that no one else can see, which will absolutely change your portfolio size, because now you can be calm, you can be relaxed, you can be stoic, knowing that you know what the news doesn't. Whatever they say on CNN and CNBC and all the crypto other channels that are just flooding the news and everything else, fear, uncertainty, and doubt, fear of missing out, hopium, depression, all the rest, you can go, it's just crowd psychology. It's overheated, underheated. This is typically what happens. Is it a wave 2? Is it a wave 3? Is it a 4? Is it a 5? Is it a wave 5 over 3? Is it a 4 over ABC? You can kind of now get the scope of having a different viewpoint on the market itself. So let's finish with a quote, as I always do. Beneath every success is a mountain of necessary failure. Beneath every success is a mountain of necessary failure. Now, no one wants to fail. I don't want to fail. Failure is horrible, right? Especially if you're going for something and it doesn't work out and you put a lot of time, energy, effort, money into it and it hasn't worked. But there's valuable lessons. But the lessons don't come for free. The silver linings don't come for free. You have to look for the lessons. But now, hopefully, that I've given you the scope of the market of where we're at right now and what's likely to occur. And it will rinse and repeat again and again and again. You'll be able to learn from what happened. The failures are gems, they're diamonds. We have to thank the failures and get everything we can from the silver lining and then apply it in the market. And then if you can do that consistently, you should be able to make a lot of money. So don't forget, like, subscribe, share this one. This was a powerhouse. This was, I wasn't expected to go this long today, but I think it was worth the time.